Yo, 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 this is Migs from Market Open. Hey, so lately I've been getting a lot of questions from people that had absolutely no idea what trading is, how you do it, how you start, or anything like that. So, my hopes with this channel is to be able to get out some of the information or be able to answer some of those questions for you guys or for those people because odds are if you're watching this video, you most likely don't know that much about trading. Um, so I want to just be able to put out all this information. If you guys have any questions, make sure to leave them down in the comments, and I will try my best to get those answered for you. But I kind of wanted to start a little bit with the very basics, just on what the different types of traders are. So what I'm going to go do is put them in chronological order, so from shortest to longest. So there are different types of traders. So you can be a day trader, you can be a swing trader, or you can be an investor. So by definition, a day trader, just what it says on here on Investopedia, so we'll just go with the in the book answer, I guess you could say. A day trader engages in long and short trades in an attempt to profit by capitalizing on the intraday movements of the market, price actions resulting from temporary inefficiencies in the supply and demand of the moment. A day trader often closes out all trades before the market close and does not hold any open positions overnight. Some day traders use leverage to magnify the returns and generated from small stock price movements. So that is, I feel like that is a lot of wording for somebody that's relatively new to the market. So what I'll do is I'll break it down for you. So day trading, you're basically just making trades within a 1 day span. So what this is right here is a chart of a specific stock that I traded today. And so the market opens at about 9:30 every morning, and it closes at 4. So this is the movement that the stock did all day. So it moved up, down a little bit, kind of went sideways for a while. So your goal as a day trader is to buy and sell the stock and try to predict its movement within a 1 day span. So you have those hours from 9:30 to 4 to buy and sell those stocks and try to make a profit off of it as best as you can, and then close out by the end of the day so you don't expose yourself to any movement after hours, which is trading after the market's closed, or perhaps pre-market the next day. Now, moving on to the next one. Now, the next one would be a swing trader. So, swing trading attempts to capture gain in stocks or financial instruments within an overnight hold to several weeks. Swing traders use technical analysis to look for stocks with short-term price momentum. These traders may utilize fundamental or intrinsic value of stocks in addition to analyzing the price trends and patterns. Okay, so basically what that means is that instead of looking at stocks in a 1 day span, so remember I said this is from 9:30 to 4. So what swing traders look at is they look at the whole movement of the day within one candle. So each one of these candles represents 5 minutes. Now I'm going to switch it over to a 6-month period. So now each candle represents the movement of 1 day. So now if I was a swing trader, I would be looking for something to break out either to the upside or to the downside. So let's just say here that above this, maybe this would be my buy trigger price or anything. So as soon as it hits the 34.73 on here, if I was a betting man, I would say that the stock is going to go up. So let's just see here. So right here you would have bought and you would have held it for 1, 2, 3, 4, 5, 6, 7. So you've been holding it for 7 days, and the price went from that 34, 73-ish, 68, all the way up to, shot up all the way up to 42. So you've been holding the stock for several days. You can either sell it and take your profit or keep holding it from the span from several days to several weeks. So however long you want to be able to hold on to that. Now, on the longer spectrum of that, you have investors. So, what an investor is any person who commits capital with the expectation of financial returns. Investors utilize investments in order to grow their money and or provide income during retirement, such as with an annuity. A wide variety of investments vehicles exist, including but not limited to, so they can trade stocks, bonds, commodities, mutual funds, exchange traded funds, which ETFs for short here. You have options, futures, foreign exchange, gold, silver, retirement plans, and real estate, all of that stuff. So with swing trading, you can trade all of those as well, but obviously on a shorter term. Now, an investor is looking to buy and hold for a very long time. Now, the difference in how people look at investing is investors use what is called, let's see here, they're fundamentals of a company. So let's just see, I'll click on here. Let's go to GE, so General Electrics. So what they'll do is they'll go over to financials over here. So I'm using Yahoo Finance. So with a company like GE, obviously they've been in business for a very long time. So what investors are looking at, they're looking at the revenue, total revenue, seeing how much money they're making per quarter. So if the company's growing, obviously they're headed in the right direction. How much money they're bringing in per quarter as well. So each investor has their own sort of formula that they can break down and see if it's worth investing in the company for the long term. So investors are looking to buy and hold the company, could be for months, years, or you could take the Warren Buffett approach and basically never sell. So they're just trying to buy, let's just say like Amazon back in the early or late 90s, when it was dirt cheap. And now the stock by itself is basically looking at about $1,000. So you're looking at Amazon here. Oh, actually, you know what? Let's do this. I'm not sure if the chart will even go back that far. Max. Okay. Full screen. Okay, so an investor would ideally try to get into Amazon. Oh, there we go. Max. Here we go. So back in 2001, so about 2001, the price of Amazon was $8.94. So now, as you can see, this would be somewhere down here would be ideal for an investor to get in. And now the price of the stock is $967 as of September 6th. So they're looking to buy and hold for several years. So 2002 all the way to 2017, I mean, that's 15 years, but that's the type of time frame that investors are looking at. Now, the difference between investors and swing traders and day traders, the way that they analyze stocks. So I told you earlier that investors look at financials. Now, day traders, they look at technicals. So technical information. So let's back up a little bit here. So we'll go back to Amazon. And so we're trying to look for a pattern that we recognize. So based on this one-day chart, I'm looking to optimize the opportunity to be able to get in and out of the stock within one day. So people that are swing trading and day trading, they're looking for patterns. That's all they're looking at. They're looking at candles and things that they recognize to be able to recall and be able to set a risk, maybe risk $100 to make $200 or $300 or something like that. So all they're doing is looking for a pattern. Now, a daily pattern here for a day trader would be within this one day. But now if you're looking to swing trade, you're looking most likely at a 6 month to a year chart. So then now you're looking at daily patterns. So let me take this away. So you're looking for daily patterns. So obviously Amazon is on a downtrend right now, so you most likely don't want to buy it until you look for a reversal point. But we'll get into all that later. Like I said earlier, if you guys have any other questions, that you would like answered, definitely go ahead and leave them in the comments section, and hopefully this helps anybody who has questions out there. All right, bye guys.